What if I told you one company reaches nearly half the planet every day, just posted another blockbuster quarter, and is spending tens of billions to build the AI infrastructure of the future? That company is Meta Platforms' parent of Facebook, Instagram, WhatsApp, and Messenger. Today, we'll break down the business, the numbers, the risks, and the trade-offs, so you can make your own informed decision. Meta runs two big engines. First, the family of apps: Facebook, Instagram, WhatsApp, Messenger, and Threads. Together, roughly 3.5 billion people use Meta apps daily, evidence of massive scale and stickiness. This is where almost all the revenue comes from. Digital advertising across those surfaces and tools that help businesses reach customers. Second, Reality Labs. Meta's long-term bet on AR and VR Quest headsets, Ray-Ban Meta smart glasses, and future AR platforms. It's early, it's investment heavy, and it currently weighs on profits. Meta has been trading near record highs, with a market value in the trillions. The multiple sits in growth territory, reflecting strong ad fundamentals, growing business messaging, and investor expectations for AI, and a modest dividend signals financial maturity, though it's not an income stock. The takeaway: markets are paying up for execution today and potential tomorrow. Recent results showed double-digit revenue growth and faster earnings growth, driven by stronger ad demand and AI-driven tools that improve ad performance. Operating margins expanded, even as Meta ramped capital spending for AI infrastructure. Management guided to continued growth while lifting annual CapEx plans to build data centers, custom compute, and networking for AI. What's driving the business? AI-powered ads. Better recommendations and creative tools are lifting advertiser ROI across Facebook and Instagram. Small improvements at Meta's scale add up to big dollars. WhatsApp Business. The sleeping giant. Business messaging, payments in select markets, and AI automation are turning WhatsApp into a global customer service and commerce channel. Adoption by enterprises is increasing, and pricing changes are designed to scale usage. Meta AI across apps, assistants, creative tools, and editing features are rolling out to consumers and businesses. The stated goal: personal superintelligence embedded across Meta's family of apps. Reality Labs. Near-term losses, long-term platform bet. Smart glasses show promising traction. VR remains niche. The thesis is patient capital for the next computing interface. Latest developments. Another top and bottom line beat, with guidance that underscores resilient ad demand. Higher full-year CapEx to accelerate AI infrastructure. New WhatsApp business capabilities. Centralized campaigns. AI-enabled customer support, calling for large enterprises, and pricing tuned for scale. Continued AI feature rollouts for creators and advertisers, including generative tools to speed content production. What notable voices are saying? Public market commentary has emphasized Meta's consistent execution and the growing contribution from AI and business messaging. Some analysts highlight the trade-off: higher CapEx now for potential durable advantages later. Others caution that regulatory headwinds and ongoing spending in Reality Labs could test investor patience. This is shared to inform, not to endorse. Key risks to weigh. Capital intensity. Building world-class AI infrastructure is enormously expensive and can pressure free cash flow if returns are slower than expected. Regulation. Privacy, antitrust, and platform rules in the US and EU can affect data use, targeting, and monetization, and may create fines or product changes. Reality Labs drag. Losses continue with uncertain timelines for mainstream AR/VR adoption. Macro and competition. Ads are cyclical. TikTok, YouTube, and others compete fiercely for attention and advertiser budgets. Long-term versus short-term framing. Long-term. The case often cited centers on unmatched global reach, AI-driven ad efficiency, and the monetization runway in WhatsApp business and AI assistance, balanced against sustained CapEx, regulation, and the Reality Labs spend. Short-term. Watch ad demand trends, WhatsApp business traction, margin resilience amid CapEx, and any regulatory headlines. Expect volatility around earnings, product launches, and legal developments. Suitability for viewers over 30 in the US. Growth tilted profile. Primary exposure is to digital ads, AI, and business messaging, not a high-yield income play. Diversification lens. Many prefer holding mega-cap tech inside a diversified portfolio, mindful of risk tolerance, taxes, and time horizon. Volatility awareness. Execution is strong, but headlines and CapEx cycles can swing sentiment quickly. Numbers to remember. Double-digit revenue growth with margin expansion. Billions in quarterly profit and consistent beats over multiple quarters. CapEx ramping substantially to fund AI infrastructure. Family of apps engagement measured in the billions daily. Balanced closing. Meta combines immense scale with strong profitability and ambitious AI investment. The upside case. AI-enhanced ads, accelerating business messaging, and the option value of AR, VR. The downside. Regulatory constraints, heavy CapEx, and prolonged Reality Labs losses. This video doesn't encourage you to buy or sell. It lays out the business, the fundamentals, the latest developments, and the risks so you can decide what fits your goals and risk tolerance. Consider speaking with a qualified financial advisor before making any investment decision. Final reminder, this is educational information only, not a recommendation to buy or sell any security. Your decision is entirely your own.